Hey guys, Mike here. So, oh boy, what a day in the market and what a roller coaster of a day. And you might have noticed two indexes were like, yay, we enjoy it. And two others were like, no thank you. What's going on here? And there was one simple reason: two loved it and two really didn't, right? And we had a mixed bag. And I'm going to go into something very important that's coming out tomorrow, okay, that you need to know because it's really going to affect the market. And there's no doubt about that, and swing us in one direction or the other for sure, depending on if it comes in hot or not. So I'll go in detail on that for you, as well as some stocks that are getting absolutely hammered right now. But we had data come out, right? We talked about GDP, and of course the market was like, yay, great, it looks weaker. I mean, if I'm looking at this, I don't have to be an economist to say, well, if this is GDP and it's doing that, well, that's not good, right? But of course, what's bad for the economy and bad for people working is good for the market, right? As far as we know as of now. And then other data coming out like the Texas service sector outlook when it comes to business activity, obviously just doing nothing, right? Sitting in contraction below zero right there. And of course the stock market's like, well, that's wonderful. And then you go over to the same store sales weekly year over year, and you can see it's increasing, but if you look to the left, that's just normal, right? That's the level you're kind of supposed to be at. And of course, the 10-year was like, yay, and it dropped immediately at 8:30 this morning. Went down about 1.2%. And of course, who loves that? Well, IWM's been super beat up. We've been talking about it. So at one point in time, it was up 1.5% until the sell-off started about 2 hours before close, but it ended up green today about 0.85%, which it needed a green day, as you can see right there. And so again, it's going to have plenty of resistance above with that 2023 high. 200 is still in the cards for this to go down right there and retest that. Just depends on all this data that's going to be coming out. It's going to be affecting yields, especially for tomorrow. Again, you go over to what else? Dow Jones Transportation, another beat down deal right here. Finally, gets a green day today. We'll see if it's going to continue or not. And what you really got to look at on the Dow Jones Transportation is it forming an inverse head and shoulders. That's what I want to know. Right, is that if something similar to it? That's what I'm looking for, to see if it comes back up, then comes back down. But I tell you, the sector that really needs cuts more than anybody else has to be the banking sector. Like, this is the latest data we got out here. Just look at how bad off. Look at this. You've never seen anything like this. This goes back to the great financial crisis for banks, right? This is the unrealized gains that they have on their books. Some are held to maturity. Some are available for sale right now. And this is why the Fed stepped in, because they didn't want all these banks having to sell these bonds, which are underwater for them, right? But there's a whole boatload of them, all right? And so as these rate cuts have gotten pushed back, regional banks can definitely feel the pressure. If something's going to break, obviously they've already broken, but it'll be them. That's why the Fed chairman even said there'll probably be more banks failing. Then that's not even talking about the commercial properties. Oof, look at this right here. Share of banks with CRE loans 3 times or more of their capital. And it's really just concentrating in certain areas, right? California, Washington, Oregon. So west and northwest, right? And then northeast, New York, Maryland, Massachusetts, Rhode Island, New Jersey, right? And so, boy, those aren't doing so well. Now, here's the key, though. There was one thing that did not care today, and that was HYG. As the S&P was pretty much red all day, look at HYG. It was green all day, never turned red. Even when you got this big sell-off at the end of the day, HYG was flat, did not care. Now, and that's important to understand, because this is junk bonds, right? This is the riskiest part of the bond market. Remember, the bond market is 3 times the size of the stock market. It's what runs everything, and so it's way more important. And so when you're seeing that and not even being affected, the stock market is going south and the HYG is green, right, and not even affected by these sell-offs, I'm just speculating. Maybe you know the factual answer to this, but to me, it has to do with the fact that the Treasury is starting now. They're buying back of bonds, right, every single week. So that's going to put liquidity and help secure that, right? They know the Fed in the next 3 to 4 weeks, whatever it is going to cut their roll off their balance sheet of the bonds by 55%, I believe it is. And so that's why maybe junk bond market's like, we're good. We're not really affected by this, or any of the economic data coming out showing that the economy is slowing and stuff. So my bond experts out there, let me know what you think about that. But that was very noticeable to me today, because you're seeing that divergence yesterday, slight divergence where the HYG was kind of heading south and the S&P was kind of heading up some. But, maybe that's not the case. So we're just going to keep an eye on it. Now, one thing that still is a theme is stocks getting crushed If they don't raise guidance, I mean, just kind of hitting the numbers don't seem to be the deal, and they crush them. You had Salesforce get absolutely nuked. You can see, look at this thing, 20-something% from earnings. I mean, oh boy. So that went way down, okay? You know, and when you look at a daily on this thing, it was in like a support area. And I was going to mention this one yesterday, but I saw the report earnings, so I didn't. I'm glad I did now. But when we come out on the weekly, you can see, you know, it is an area that has been support and resistance. So an area of interest for sure is we'll see if they start to push this back up or at least consolidate it right there. Just keep an eye on that area around 215 to 218. Now, MDB, I have no idea what this company does, but they got smoked, right? Absolutely got crushed after earnings, but this was way down. This is down. I mean, the market's been moving up. This thing in 2024 is way down, like 55% or some crazy mess, which is just nuts. It was like a $500 stock at one point in time. Now it's sitting there at 235 and after hours. It's coming into an area of resistance. Let me know in the comments. I'm not even going to look it up because I have no interest in this stock, what they do. But wow, I mean, that is not good at all. Then you look at another one, Dell, and this is important. Dell down 21% over the last couple of days, but you can see on earnings, you know, I guess I'm going to say the earnings were bad or anything else. But again, it didn't matter, right? So they're coming in this area. They need to hold right there. The reason why Dell is really important, obviously they had this just crazy move up. But if this continues tomorrow, red, right, and doesn't start to turn back up, it could drag down what? The rest of the semiconductor stock, especially NVIDIA, right? So NVIDIA finally showed that it is human. Oh my goodness, look at that. Had a red day, and it was actually green most of the day, and then sold off down about 4 to 5, or down about 4%. After lunch. And so again, what we got to look at is this 10-day moving average has to catch up right here. That's what we've talked about. So consolidation is not a bad thing. I mean, I've enjoyed the ride all the way up and loved it and all that good stuff, but we still got about 10 days of this stock split right here. And so we're going to see what the market's going to be doing because the market shows weakness. You know, NVIDIA is not, you know, inhuman to that, okay? So again, now we're bringing that level right there. But again, if we sit here and just consolidate right here, that's not a bad thing at all, okay? Not a bad thing at all to build that out. But look for it to be down tomorrow if Dell continues to sell off and other semiconductors. Now, I bet you didn't know this because I sure didn't know it, but Dell was actually, until today, outperforming NVIDIA for 2024. Can you believe that? Like, that is nuts. Dell. I mean, I would never have guessed that. Of all the companies to outperform NVIDIA, that is not the one. But of course, now that it's sold off, it's right below it, right? Now, that leads us to S&P 500. You can see we broke down from the previous all-time highs. That brings into account 5,200 now, which can be tested if we continue this weakness down. Once you break a key level, we got to look and see if we can get back above it, or is it going to be resistance now, which usually is what happens, okay? A lot of this data coming out, the yield, the 10-year yield will have a lot to do with this, whether or not that's going to happen or not. But currently, we are in this short-term downtrend right there, as you can see, heading towards 5,200. We'll see if we get good data tomorrow, which means when I say that, I mean like, oh, look, it's going to encourage rate cuts, so this is what we're going to do. Now, of course, S&P, reason why it was red, because when 6 stocks make up 1/3 of your index, well, guess what? And they don't go green, and you got NVIDIA down 4%, and a lot of the others, like Microsoft, its biggest, was down 2 to 3%. That's going to happen. So again, it's the most we've ever seen as far as the concentration, but that's what it is. Now, one stock in particular has some good news. Tesla, they're going to start, or at least trying to register for the full self-driving software and then also use it as a monthly subscription. That's what they're trying to do. We'll see if it plays out. And that's why you got the pop. But once again, you know, it's holding this anchor VWAP from the low right there. It's still sandwiched in this range between all these VWAPs and between 172, 187. And it's kind of a joke now. As soon as you see that pop up in the morning candle, it's going to sell down immediately. And then it's going to, after lunch, start to go back up, right? Anytime you see it, that's what's happening. You saw it today. You saw it, I think it was Tuesday, it happened again. So again, sells down. And after lunch, here we go, right? And so looking at the data we're talking about tomorrow, we're talking about core PCE. So I want to show you a snippet from one of the members of the video that I put out today, but exactly what happened the last 4 times. Did we actually hit it or not? And then also, you know, how did the market react? Because IWM, which is really rate sensitive, right, is going to react sometimes differently to Qs, which is built off of these larger stocks, right? And they don't really need a big drop in rates to go higher and lower. So check this out. Real quick with the core PCE, you can see, you know, we came in April as is, right? We still had personal income and spending. It didn't seem to matter. what happened was IWM, boom, goes up big time at 8:30 to 9:30, and then pretty much sideways for the most of the day, but still end up closing up nicely, well over 1%. The Qs, because sometimes they have different reactions, it gapped up as well, and then kind of just went sideways, a little bit up for the day, but up nicely for the day as well. And then when you look at core PCE in March, it didn't matter because the market wasn't open, so we got to skip all the way to February here. You can see it came in as is again, right? And then what do? We gapped up, sold off the rest of the day. I mean, and so it's something you'll probably see a theme of when it comes to the IWM especially, is they'll gap it up like crazy and then either go sideways or sell it down and dump it on us at 9:30 open. The Qs, same thing, gapped it up, dumped it right there, and then went ahead and raised it up in the afternoon, about 1% up, right? Then we go into January, boom, right on. You know, we're hitting this thing right on the head when it comes to core PCE. Doesn't really seem to matter what personal spending or income is doing because some of them came in hot. But you see right here, gapped us up again, and what they do the rest of the day, sold us down right on IWM. And so it seems to be, again, a theme when it comes to IWM. But when you go to the Qs, you can see on this one, it actually had a negative reaction right here. And so it just basically sold off almost the entire day. So it was actually a red day for the Qs right there, even though core PC came in as is. And so we've hit it the last 4 times, right on the head. So we'll see if that happens again. If it does, you would think you would see the 10-year yield come down, IWM, which is super rate sensitive, unlike the Qs, go up because it's small caps. The Qs don't need a big drop in rates to keep churning up as long as those MAG 6, 7, 5, whatever the heck it's called now, actually turn out and do well. And again, as you saw, the IWM have a great day. It really marches to the beat of its own drum, right? And the Qs can go down. So if Dell's selling off and semis sell off and some of the MAG 7 sell off, but those 10-year drops, you can see IWM ramp, right? Because it's been hammered. That's what happens. You'll probably see the transportation stocks rally again as well, but that's what we got to see. So just look at the 10-year yield. If it drops in the morning at 8:30, you know what kind of day it's going to be, at least for IWM. If it spikes, again, you know what kind of day it's going to be for IWM. We'll see how the Qs are going to respond. And so we'll see what happens. But anyway, we're going to wrap up the month of May. So next week we'll start June, whole new month and everything. June, again, seasonality-wise is usually weaker than the others, but seasonality hadn't really played out anyway. So again, it's an election year. We'll see what's going on. Got a lot of liquidity stuff coming into the market to prop it up and hold it up. I just saw today where the president and his crew said they want to give a $10,000 tax credit, I believe it is, to first-time home buyers to help them with their payments. Buddy, you know how much liquidity that is? I mean, goodness gracious. So, you know, I don't know if that's retroactive or they're waiting until next year, I guess. So that'll be next year they would see that, I guess. I hadn't read the plan. It hadn't gotten approved, but they're asking Congress to do it, which means it probably won't happen. But again, they're trying to roll out anything they can to keep propping up and speed this thing up. Because I guarantee you, there are economists up there telling them, hey, man, things are slowing down. Like, you don't want to hit a recession right before the election, right? So, you know, that's just, they're doing what they got to do. They're doing what politicians do. So anyway, hope you guys got something out of it. Hit that like and subscribe button if you did. Really appreciate it. And I'll see you guys tomorrow.